welcome back to the BI Edge, where we break down Australia's energy data to uncover what's really driving production and profitability. In this episode, we're diving into Australia's LNG market, comparing export performance against domestic plant energy consumption. So the data story here today, we've got Australia LNG exports versus plant consumption. So from 2010 to 2023, we can see in financial years here, Australia's LNG exports grew from under 2,000 petajoules to over 4,000 petajoules. So if we look at the exported market here, so we can look at this as exported LNG. We can see here that, sort of here with the green, 2,868, okay, and it comes all the way up to here to 4,500 petajoules in the 22 to 23 financial year. At the same time, LNG plants themselves have become massive energy consumers. Okay, so we can see the LNG plants in petajoules in the consumption here, so the amount of consumption in petajoules. So this is how much we exported in the green and on the green line, and the yellow line is how much consumption we had in terms of energy to run these LNG plants. So LNG plants themselves have become massive energy consumers, now using over 350 petajoules a day or a year, I should say, in consumption. So 368 there was used in the 22 to 23 financial year. And this is just to process, liquefy, and liquefy the gas before it hits the export market. So we look down here, this is the LNG export volume up consumption, because you want to take into account how how much we're exporting minus the energy use that it takes to produce this LNG. And I've also got that on a secondary y-axis there. I've got the total Australian dollars that we've made in each financial year. Okay, so that's just running through what we've sort of got here today on the dashboard. On the surface, exports look strong and revenue has soared, touching 92 billion Australian dollars. So we can sort of see that with the revenue up here, it's 92 billion, 92.6 billion here in the 22 to 23 financial year. So the economic implication of this is there's catch. So much of the revenue surge wasn't due to higher production efficiency. It was price driven when global LNG prices spiked in 22, as we can sort of see for prices for LNG over here. We can sort of see it here, but we want to go back to one of our previous dashboards here to point this out again. So you can sort of see that, we sort of see we made a lot more here relative to previous years for same amount of petajoules on our export market. So as LNG spiked in 22, revenue exploded while output barely changed. And we can see that there with the total petajoules with output and then revenue exploding here. In economic terms, Australia's LNG sector is becoming increasingly price sensitive rather than productivity driven. Energy consumed by plants erodes net export margins. And this means more gas is being burned domestically just to send gas overseas. So what we really need to take into account here is having a look at the LNG difference in petajoules there, because this figure here is these two figures here, or this figure here taken away from the export. So this is exports minus consumption in petajoules. So if we have a bit of a look at that, we can sort of see that that's increased there over time. So we're exporting a lot more, but if we look at it from a consumption perspective, consumption here has continued to increase and continue to go up, okay, as we really saw a big increase here from the 14-15 financial year where it's only 131 petajoules for consumption, all the way up to here in um, in 23, which is 368. So more than doubled in that period. It's sort of like getting close to tripling. Tripling's 393. So yeah, nearly tripled. Probably has tripled by now if we compare over the past decade in terms of um, the LNG plants consumption, energy consumption. So you want to weigh that up with LNG prices. And if we look at the revenue over here, we can see here that throughout sort of the same period, our revenue has gone up here by more than consumption. So it looks good from like a business standpoint. However, it's still a bit of a problem because it's sort of sensitive if it keeps going up and then gas prices come back down to say here, then we're not being as efficient as we could be. So the strategic insight here, this raises a key question for policymakers and investors. If Australia's LNG sector depends on global price volatility to stay profitable, where's the long-term resilience? Domestic energy costs are rising, and plant consumption is locking in high opportunity costs. To sustain export value, Australia will need to focus on energy efficiency, carbon capture, and value-added processing, not just raw volume. So before we wrap up today, I'm just going to go through some key points here. This is the net energy mining in petajoules versus net energy use total. Okay, so this is across the whole Australian energy or hot roll. That's the net energy use for the whole Australian economy, and that is how much energy we use in the mining industry, or Australia uses in the mining industry. So, if we're looking at that mining industry, there's a key relationship with our total energy usage as a nation and a strong correlation between that and energy consumption within the mining-based industry, which would make me think that it's worth investigating how we can be more efficient in terms of consumption in the mining industry to maximize what we're exporting and maximize our energy supply throughout our economy. So you can see here that they've both trended up exponentially over time. 2010, 2011 financial year here to 22, 23. So mining 765 there, 414. So we're using a lot more energy, which means we're producing, we're exporting more in the mining industry. And then the household, the total energy use throughout the Australian economy has also really gone up from 2,700 here, 3,140. Okay. But, mining has gone up probably by, nearly doubled in terms of the net energy use over time. Once again, probably has, if we had the latest data here, if we're looking at net energy use for total industry, we've only gone up by 400 to 500 petajoules there. So, it is an interesting one to sort of have a bit of a deep dive there. So the takeaway of this today is pretty simple. Australia's LNG boom has hit its efficiency ceiling. Future growth will come not from exporting more gas, but from exporting smarter, reducing plant energy intensity, and insulating revenue from global shocks. This is where economics meets energy policy, and it's the real frontier for Australia's next phase of resource development. Thanks for tuning in today. And if you've got some questions, feel free to post and comment down below. And if you like this video, feel free to to like and subscribe. And I look forward to catching you in the next video. Cheers.